Hi, this is Lynn, and I am here with Nick and Lindsay, who are the chair and vice chair of the Fair and Responsible Banking Committee, and we are here joining you from CBA Live. Lindsay, Nick, would you like to introduce yourselves, tell our listeners a little bit about you?
Sure. I'm Nick Roesler. I'm the Fair and Responsible Banking Officer at U.S. Bank, Senior Vice President there as well. And I chair the Fair and Responsible Banking Committee based in Minneapolis, and been doing fair lending and UDAP and compliance for decades now.
Hi, I'm Lindsay Yousif. I'm the Executive Compliance Director at Ally Financial, and I'm also the Fair and Responsible Banking Officer and the Vice Chair of the CBA Fair and Responsible Banking Committee, working with Nick. And I think I've been in the industry over 20-some years, most of the time focusing on fair lending and UDAP as well.
Great. Well, thanks again for joining us here on the podcast. So, Nick, would you tell us a little bit about what the Fair and Responsible Banking Committee does? Like, who are your members and kind of what's your mission?
Sure. Yeah. So the Fair and Responsible Banking Committee is one of many committees that the Consumer Bankers Association has assembled and put together over the years. And it's made up of 54 banks currently. And so we meet monthly, and the focus really is about promoting education and the exchange of information, ideas about fair lending, UDAP, and at times sort of overlapping compliance requirements. So it's really about sort of bringing a bunch of banks together that are all working on similar risk topics and discussing kind of what's going on. And I think in many cases, that's conversation and dialogue is helpful especially in areas where there's not prescriptive guidance. And so it's up to the industry to kind of formulate best practices and things like that.
Sure. And there's certainly a lot of things going on in the industry right now, specifically as it relates to fairness in banking and in lending. So Lindsay, when you think about kind of the committee and your 54 partner banks who are members of it, how does the committee really kind of influence those external partners, maybe vendors that they work with, to have the same sense of importance of fair and responsible banking principles? And how do you see that kind of impacting then the industry that partners with banks?
Great question. So CBA really gives us a platform where we're able to work closely with vendors as well as outside groups, consultants, attorneys, and especially each other to learn best practices. So we really bring to the table what we see within our institutions, our experiences, and our many years of learning how to implement programs and services to determine what are some of the best practices that we do as a whole. And what we find is we have the opportunity to really speak with, again, vendor groups and let them hear our voices as to challenges that we have when we're implementing new regulations, or if a program isn't working well, what do we need it to do to work better for us? So for instance, we have the new 1071 or the small business lending rule, which is going to require for many institutions to collect data and then submit it on their law for small business, similar to HMDA or CRA. So now we know that we have vendors that are creating these programs for us so that we have the platform to create or collect that data, create our law, and then submit it to the government on an annual basis. And so what we're doing working together is we can find what are some of the challenges, what are some of the things that we need to do, how can we make this more simple, and making sure that that is part of what's going on with our third parties. But it's also looking at outside as consultants as well. What are the consultants bringing? Are they hearing our challenges, some of our concerns with what we're dealing with on a day-to-day basis, and how can they help us to be more effective and efficient in the work that we do?
Sure. And do you have any consultants on the committee as well, or are all the committee members bank partners today?
All banks.
All banks. That is what I thought. So I think, Nick, you mentioned something that was interesting, that the guidance isn't always prescriptive. That may be very broad, and then you have to work with either external partners or consultants to figure out how to implement that and make sure you're kind of staying within the bounds. So how does the committee think about kind of advocating with the regulators or advocating in Washington, or really just CBA in general, to drive towards a little bit more kind of clarity or prescriptive application of the regulations?
Yeah, and that's a great point in terms of the committee being a bit of a feeder for the CBA's advocacy efforts, because they're taking sort of the industry brain trust of fair and responsible banking and what's important to the group on issues that are arising. Maybe there's a request for information from a regulator. Well, then CBA is wanting to know, well, what should we put in there if it's fair lending related, or maybe there's a new rule. I mean, talked about 1071, and so advocating for, hey, there's elements here that maybe aren't appreciated or are really like sort of considered in the rule, and we want to bring that perspective. And so that's, I think, through our discussions of, changing regulations or new expectations and the challenges that we have or questions that we have, we can bring those perspectives. And then whether it be a one-off question directly, facilitated through the CBA, or the CBA bringing in regulators as they have to our committee in the past, I think those are all ways that we can have this kind of dialogue, and it brings a greater perspective than just any one of our single banks interacting, because we all have government relations folks, and we all interact in some way, shape, or form with our regulators too. So I think that's part of the value that I think the CBA and the committee brings.
Absolutely. And they really take all of our concerns and group it as a whole. That really drives the industry and what we're doing from a fair and responsible banking standpoint. And it's great because the CBA really is the voice on the Hill for us. Instead of individual voices, it's the communal voice of fair and responsible banking.
Sure. And I think that's definitely well reflected here at CBA Live, where you've got a number of bank partners, you've got vendors like us, and then you've also got a couple of the regulators here, both presenting and attending the sessions, which is great. So then I think, Lindsay, when you think about, so we working with the regulators, working in the committee, working across partners, like how does the committee then kind of disseminate that out to the membership? Like how are you sharing kind of monitoring techniques, best practices related to fair banking?
We're always looking on what's coming out of our regulatory bodies, what are the trends, what are the risks that they're identified in other organizations, and making sure that when we're meeting, we're talking about that so that we know, hey, this bank has a consent order. What do we need to look for internally, or what best practices have you put in place to help address some of these risks?
Sure. And I definitely think, just even looking at Q1, I think the number of consent orders has been relatively high across the industry. So I think, Nick, just can you maybe just kind of expand on that, like how the committee is looking at those emerging issues or things and new topics that are coming out of, whether it's consent orders or even just kind of advisory opinions that come out as it relates to fair banking. Like, how do you kind of stay on top of just the kind of velocity and volume of what's out there right now?
Yeah, that's a great question, because I think individually, our respective banks and programs monitor for emerging risks. We're looking for guidance or consent orders and things like that we can learn from and figure out how to implement sort of our own best practices within our institutions. But what's nice is when you bring together the multiple banks and CBA. So often what happens is CBA staff will say, hey, here's sort of a DC update. Here's what's happened. There's been this proposed rule. There's been this final rule issue. There's been this whatever. So that like almost forces us to, focus in on those things. But it's not just okay, I'm going to wait until the committee to hear about this or something. It's the perspectives of like, hey, how did you read this? Or, I don't know if I'm reading into this too much, but what did this sentence perhaps mean? And so it's those kind of conversations that I think are interesting and helpful. And yeah, so it's kind of, as well as I think the CBA, again, it's kind of a two-way street of going, all right, there might be some news article that's one of our members saw, no one else did. And it's just, it could have been something specific to their bank and it hit their kind of media tracking. And so those things are invaluable as well to sort of go, okay, well, that might not have been on my radar. So to sort of use the strength of many to have this more cohesive but yet still like fair and responsible banking focused view. And that's the lens of everyone on the committee, really. I mean, some wear more or less hats, but it's one thing to say, oh, this news article came out and there could just be like a reputation impact, right? Well, then, okay, that's fine, it's headline risk, but does it mean anything for your program? So it's those things that's like, okay, this isn't a conclusion yet, but is it something to be worried about in the future?
Actually, and it seems like the last, 2-3 years with our current administration, it is nonstop throwing all kinds of information at us. And sometimes it's repeat, sometimes it is against previous guidance. And so we're trying to figure out, is this important to us now and what do we do with it?
Mm-hmm. And I definitely think that it is kind of an interesting point you made, Nick, that there may be something that comes out that seems related but is unrelated. I think we certainly see that being on the AI side of the world, that the industry tends to get kind of painted with a pretty broad brush that, is I think we are fond of saying internally, like we may not live in the same house as some of those other partners, but we're certainly on the same street. And so we're feeling some of that reputationally, where you have to worry about those things that may not really directly impact you. So I think the idea of fair and responsible banking certainly is new, but I do think that it's really, I think, expanded more asset classes. I think traditionally you thought mortgages a lot and lending and traditional banking, but now with a kind of variety of vendors out there and different products, that the kind of stature of fair and responsible banking has really become much more important and visible within many banks. So I think, Lindsay, how do you think about working with your member banks? And
so one of the best parts of being part of CBA is that you're really working with the best in the industry when it comes to fair and responsible banking. We worked at all different size institutions and we have different experiences, but we're also we become friends outside of just the committee. So we've worked at each other's institutions before. Some of us have worked together on the same team, and in the future we may again. And so, there's often times where we're calling each other or communicating outside of the committee because we can't always wait until we're accidentally waiting to talk. And if there's a consent order that comes out or something that's a concern, or I'm in the middle of an examination and I'm being asked these questions, at any time you can call or contact anyone else in our committee group, and they're always available to talk to you. And it really is helpful because being in fair, responsible banking, it's not an easy position all the time. We have the honor and privilege to working in this position, and I always tell my team, we are honored to have this role. However, we have a lot of regulatory expectations, and we have to make sure we're doing the right thing by our bank and our customers. And so it really can be a difficult position at times. So we lean on each other for information, guidance. Sometimes it's just an encouraging word. But I also find that I like to benchmark my program at least annually. So I can contact anyone on the committee, ask them what are they doing within their programs, so I can look to see if there's any gaps in my program. And the gentleman to my right, I have called him many times over the years to say, hey, you're now my peer bank. What kind of things are you putting in place that I could consider within mine? So it really gives us that strength, again, in numbers, because I know I have that ability to talk to someone at any time that can help me with whatever situation I'm going through. And on top of that, we also have CBA, of course. So we always have the ability to reach out to anyone at CBA at any time, get feedback, get assistance. And it really is a great platform, and kind of it's a friendship group. We're all friends now. We're cheering each other on no matter which bank we're at.
Sure. And I definitely think you think the banking industry is very large, but it's very small in certain pockets, and everyone seems to know each other. I definitely liked your point about not being really want to be out on an island. If you're doing something really novel in the area of fair and responsible banking, maybe that's not a great risk to take. And you can, and we talk a lot about that at Upstart. I deal with a lot of our bank and credit union partners, and we innovate in a lot of areas, and compliance is the area that we want to be part of the pack, not necessarily innovating exceptionally there. So I think, Nick, as you think about, working with the members across the CBA and within the committee, can you share some maybe examples of some of those best practices? So maybe specific, more tactical things that the committee is promoting to their members as the fair and responsible banking continues to kind of evolve and challenge the industry.
Yeah, there's definitely a lot of different dimensions where, again, there's not a lot of prescriptive guidance or exactly your program should have this, and this. Okay, maybe the big blocks are there, but what it actually means, there's a lot of wiggle room on what you decide to implement at any particular institution, and rightfully so, size and complexity of the bank, all that stuff. But I would say, one thing that comes to mind is the area of redlining risk. And so long-standing examination expectations and exams, long history of settlements in the area. I think the general sort of risks and the types of things that are being analyzed have been, there's a consistent baseline, but then we're seeing an evolution of additional type of investigatory requests and things like that that are happening, or just hearing from other consultants or other legal counsel, external parties about working on cases that are not public, and some of the insights from there that then get fed to the committee. We discuss them. I think that's an example to me where, and even getting into, like, for example, just this morning we were talking about redlining and got kind of deep into some of the quantitative aspects of how do you define what your peer group is? And then what sort of analysis should you kind of start at a broad brush level or dive right into specific products? So it's those types of things that, you really won't find a lot of sort of a guidebook, so to speak, or you must approach it this way. And so that's where, the dialogue of like, okay, well, where do you get this data from? Or, okay, well, for redlining, it starts with HMDA data. Well, maybe not everyone has done an analysis of a particular product. Now we have, small business lending gaining prominence, I guess eventually even more so with 1071. So then it's like, okay, maybe some member banks have done some fair lending analysis in the past, and others have been kind of waiting for 1071. So it's sort of like there's a how to approach a risk management lens of fair lending, as well as some of the practical, like, well, how do I know where to go for this data? What sources are there? And not really divulging anything confidential or anything like that, within our institutions that we can't share. I mean, we're very mindful of that. But I think just having those conversations, to Lindsay's earlier point, it's like, if you don't, you're just sort of saying, well, I'm a smart person, I guess I'll make the decision based on this. And it could be right, but having that additional context could lead you down a different path and different opportunity.
Sure. That actually kind of raised another question for me, is that you're thinking about, like, the fair lending testing, fair banking testing, has always been quantitative. They're getting more quantitative, requiring different levels of kind of expertise and skills. How do you think about hiring for that? Like, is it hard to find people who really have that expertise? And this is a little bit of a question for both of you, both hiring kind of on the bank side, and then, are you seeing some challenges, particularly of banks that maybe don't have as much, aren't as large, and don't have the resources to really hire that expertise? And if you have any advice on how they could support that without really being able to then maybe hire a large team internally.
That's a great question. We were having this discussion yesterday during our committee. I said, I feel like a dinosaur in the fair lending industry, because we kind of started it when it really came out 15, 20 years ago. And so we're always looking for the next generation that is going to come on and be those fair lending officers and fair responsible banking officers. It is very difficult nowadays for just compliance in general to be hiring new persons that really are excited about it and want to do it. It seems like they're kind of steering away. But I think from a fair responsible banking perspective, we're really focusing a lot more on AI and models. And so that might help to drive bringing in new people who really want to look at model validation, how to build models, and really on the technical side. And so I think there's opportunities there. It's just making sure that it's an attractive part to them.
Sure.
And that they understand, again, with that data, what are the results? What are we achieving here for responsible banking? What is our goal? Which is to do the right thing by our customers, to bring new products and services and make it an even, fair ground for all customers to have access to your products and services. So I think it really is, that's where it is difficult right now. It really is, because on the other side, you need people that really understand the regulations so that they can understand where there's true fair lending risk. I find oftentimes people want to join compliance by starting in fair lending. And I always say, this is not really the easiest place to start. You kind of go there midway or end of your career when you understand the basics of your compliance program. So ideas on hiring?
There is a talent committee. That's a broad, yes, a CBA, but it is a difficult one. I think one thing that is a selling point is the mission of fair and responsible banking, right? This is not a checkbox exercise, and not to diminish any other compliance requirements, but it has a very emotional and sort of struggling for the word, but it's very meaningful and I think can impact people in a deeper way than perhaps other risk disciplines. Maybe you're super skilled quantitative analysis person and you could be used in a credit risk capacity. It's like, okay, that's cool. We're evaluating credit risk. I mean, is that more exciting than, defending against illegal discrimination? I don't know. Personally, I think the discrimination piece is a little bit more, meaningful at times. But so I think that's a selling point. But it really is a struggle. On the flip side, there's a lot of exciting things happening with machine learning, AI, and so if I'm, a very experienced and educated quantitative analysis person, there might be this allure of like, ooh, the shiny objects and like something that's really kind of cutting edge. Well, you're not really going to be doing cutting edge work in a compliance shop. Like, I'll just say, maybe not entirely, right? So I think that's what makes it difficult at times. But I do think there are some individuals that really, are looking for change, and it might just be a short-term kind of, hey, I want to be more well-rounded and use my quantitative skills for something different. And so that's where I think sometimes we luck out and get, folks that have some experience. But yeah, by and large, there's very well tenured positions, and then they have built that knowledge over the course of 10 plus years. And so it is a risk. And one thing that I'm noticing is, my background is I started in compliance with the Federal Reserve Bank of Minneapolis. The question wasn't really about examiners, it was more about, analysts. But I'm seeing that sort of the examiner route is less taken in the compliance realm. I'm seeing more people sort of graduate, or maybe they have a law degree, they'll jump right into banking. And I don't know why that is, but I think it seems like, dating myself a bit, but like 20 years ago, as a baby examiner, I was there like, okay, I had some banking experience, I just graduated from college, I'm learning about compliance right out of the chute, kind of right straight up from college. And I was there with others, and I can, I work with some folks at US Bank, for example, that I worked with at the Fed, so it's like this progression, and I think it's invaluable, sort of to Lindsay's point. Having that well-rounded knowledge of compliance and perspective. I guess just one observation about talent pool is like, it doesn't seem like there's that experience level of like, okay, you've been an examiner for 5 years and now you're looking to join a bank.
Cool, right. But I think that's a good point, though. We do draw on audit teams a lot of times. We'll move over to compliance, or compliance will move to audit. And so I think that's a good way to get the experience. And examiners as well. So I have a couple former examiners on my team, and they really bring great insight because they know the behind the scenes of what examiners are looking for during your examination, and kind of the trends, or how to write reports, how to create your analyses a little bit differently than what you're used to doing. And so it really is such a great way to bring people from different parts of the industry. But like Nick said, I think if you have a passion to help people and to make a difference with what your organization is doing, fair and responsible banking is really the place to do that, because you get to be passionate, you get to feel good every day that you're doing the right thing for other people, you're advocating for them, and you're really protecting other customers. And so that's why I always say it's a privilege and an honor to work in fair and responsible banking.
I think that's kind of a great end for the comment. And, privilege and an honor to work in fair and responsible banking is a great way to close things out today. So appreciate Nick and Lindsay, both of you being here.